All right, guys. So I talk a lot about three tiers of banks. So we got the national banks, Chase, American Express, Bank of America, and then there's regional banks like this one, Keybank, where there's only it's only in certain regions of the country of the United States, right? Regional in that area. Then there's local banks, local credit unions, small banks local to that community. So this particular bank, it's a regional bank, so you would have to see if it's in your region, but it's a great bank. They offer no doc, uh, low products. Particular business lines of credit, no docs, no bank statements, no W 2s, no tax returns. But let me explain just because it's no doc doesn't mean, I'm going to explain what that means. But a business line of credit or a block business line of credit, it's a lot better than a credit card. And the reason is because a business line of credit is cash in the bank. So if you get approved for $50,000 business line of credit, you get $50,000 cash in your bank. It's not like a credit card where you have to liquidate the card if you want some cash. This is straight cash in the bank. The minimum loan amount is $10,000. It's renewable every 12 months. Maximum loan amount is $500,000. Obviously, the payment is calculated on the loan amount and the rate and things like that. But it's basically uh, straight cash in the bank. So that's why I love business line of credit. Now, as a general rule, most banks, obviously, each bank has their own lending criteria. Most banks you have to have 2 years of business to get considered for a business line of credit. Okay. And then also, some might be 12 months, but as a general rule, it's 24 months. And then anything over 50,000, that's when you have to provide documents. And when you hear no doc and documents, what does that exactly mean? So what they generally like to see is if it's over 50,000, they want document, meaning some tax returns, either 1 year or 2 years, some bank statements, last 3 months, because they want to see how much deposits are you getting into your bank, right? So those are when they talk about no docs and some docs, that's what they generally mean. Tax returns on the business and or bank statements, more than likely the last 3 months to see where you're at with cash flow and the deposits going into that bank. So that's why if you can't provide that, you want to just go up to the maximum allowable amount, 50,000, and that's generally the rule for most banks that offer these products. Anything after 50,000, they ask for docs, tax returns, bank statements, etc., or whatever it is, right? They ask for documentation to prove that you're able to, to get you approved for that line of credit. Anything under 50,000 is generally stated income. However, what I do want to uh, share is what most people don't talk about. So just because it's no docs, it doesn't mean they're just strictly going off your credit report or what you say. A lot of these times, like a regional bank or a local bank, they're actually, so as an example, let's say you do e-commerce or something. They're going to, give me 1 second. They're going to, verify your business. So they want to see a website. They are going to verify that. They might Google you. A lot of regional banks and local small banks, they do that. They will actually Google your business to see if you have a business phone number and a brick and mortar or some sort of office space and or a professional email. So that's where these things come in play. Not so much for a national bank like a Chase, American Express. They're not gonna go and Google you. It's generally automated system, but for a regional bank or a local bank, they're very likely going to verify or do a lot more digging into your business. So if you do an e-commerce website, let's say they're going to, hey, provide me the link to the website. They're going to review the website. They're going to make sure it lines up with what you said that business does. So if you do credit repair, as an example, random example, you don't want to, they're going to probably deny that because credit repair is considered high risk. So whatever business you have, you need to have for regional and local banks. They like to see websites. They like to see a footprint on the internet because they can not verify, but they can go in, make sure that your information aligns with what you told them. A lot of it is your credit score, and the good thing about KeyBank, it's a soft pull on your credit. It's not a hard pull, so that's great. And they only give you a certain amount. I forget what the exact amount. Of your income, and then they multiply by a certain amount to come out with the loan amount that you get approved for. as far as your business line of credit limit. But as I stated, just be careful. Just make sure that your business looks legit when you apply for these regional or local banks. So again, you want to make sure that you have some sort of footprint on the internet or some sort of proof that you do what you do, right? So if, like I said, as an example, if you do e-commerce, they will check your website to verify that it's an e-commerce website, has all your information, your business address, a phone number, some sort of email, because they're going to verify that. They can't just go, I make $500,000 gross, you know, it doesn't work that way. They're going to do some sort of investigation, whether they Google you and you have some sort of footprint, or they're going to do some investigation. Generally speaking, that's how it works. Now, the good thing about Keybank, like I said, it's a soft pull, and then they also offer business credit cards at 0% interest. So you can apply for both. So you can get all with one soft pull. I mean, they can run a soft pull on your for the business credit card as well, but it's the same thing. So you want to make sure that you have your website in place and things like that, because they're gonna go off that. They're gonna do a little bit of digging. It's not so much of just like a stated income and just go off your soft pull credit score. They're going to do a little bit of digging based on my experience from like regional and local credit unions. They do a little bit more like just like a quick search, make sure everything aligns, and then they'll go ahead and approve you. But the great thing is it's a soft pull. And you can do several products with that soft pull. You can get a business credit card, and then you can get that business line of credit. As a general rule, like I said, it's typically 24 months, 2 years in business. Some do 12 months. I don't remember off the top of my head if this one was 12 months or 24 months, but this is again only in certain regions, so you would have to find one in your region, see if they have one. You can do it online. For the business credit cards, it is best to have a relationship. That just increase your odds, make some deposits, but you still can't get approved online. So things like that. So this is a great bank. They approve up to 50,000. You can get a $50,000 business line of credit, right? A 20. They give out big limits on the business side for the credit cards. 25,000. You got 75,000 from one bank with a soft pull. So that's something you guys should definitely check out.